Hi there, Alpha Team. Planter here. The weekly preview for the 22nd of April 24. And it was carnage last week, wasn't it? Everything all over the place. Bears all over it like a rampant Man United. 3-0 up, as I suggested on chat earlier, and cruising. What could go wrong? New all-time highs are now a bit of an underdog, aren't they? We've been talking about wave fours, pulling back. This is the psychologically difficult time for traders. It's doing exactly what you said, but it's on the edge of a cliff. We're at equal legs or beyond, some of them to the 1.618 level. We'll have a look at that on the charts. So you're starting to think, is it something else, or should we be looking at it just in terms of the three swings back? And 67% of the time, S&P earnings tend to be beaten. So there's lots of people sidelines waiting to pick this up. You've now got the opportunity, but when the leaders, the tech stocks, they're all pulling back, does it matter what's happening under the hood? There are some interesting things which I'll show you that might suggest it is time to dip your toe, but we are fighting the sentiment of Nvidia blowing up, SMCI blowing up, semiconductors falling, etc., etc. But luckily, this is a big week, isn't it? We might be able to bring the subs on. Can they have an early impact and get us back into the game? We've got S&P tonight. We've got Tesla tomorrow, which is obviously a slow motion road crash. Is that really going to make any difference? He's been slashing car prices over the weekend. Does anyone really know what Elon's long-term game is? He wants to take, doesn't he? So he doesn't really care in the short term. We've got Meta on Wednesday, and then Microsoft and Alphabet on Thursday. Now, these guys do need to pick up the slack. We can't really afford to have much of a miss there. They were supposed to be having 38% growth for the quarter overall for the Mag 7. We need that to really happen now. We might only get away with the draw if that happens. So, but that might represent itself as kind of a volatile market, which is we've had a three-wave down now. We might have a three-wave back up, not necessarily taking out the highs, and then another sell-off back to this region, what they call a flat consolidation before we find out where we're really going, probably the election time or in the run-up into that. But that doesn't mean there aren't going to be great opportunities both ways. And at the moment, you can make a really good case that a lot of the sell-offs have had a current five-wave move, in which case, there's at least a three-wave bounce coming, and it's worth playing that upside, even if you ultimately believe the market is bearish. So it's not forlorn. We've just got to be careful now. Stop losses. Let's be disciplined. If any of these indices have bounced, which they have a little bit like the Dow, the S&P equal weight, which we'll look at in a minute, sort of Nikkei, let's have the last week's lows in as a stop loss, just to make sure if this thing turns, it'll turn quickly and it might be ugly. So I had. I mean, it was absolute carnage, wasn't it? 6 days down in a row for the S&P, 3 weeks in a row for the equal weight. But if you actually further down into the equal weight index and turn it onto a daily view, something on a daily basis, despite the week being quite tough, the last 3 days really dug in. We had some green on Friday. So it is to say that there's some breadth coming through. Well, maybe that had been the leadership index, the one that was rolling over, the transports diverging, etc. Ultimate sell-off flow overnight into the geopolitics, the Israel thing. It's had a bounce and it held it. And we've got a little bit more upside today. We've got another dead cat bounce. We've had a number of attempts in the morning session, the London session, to try and push on and then ultimately see roll over in the US. There's obviously, you'd think that there would be a reason to say that there was speculative overflow, but I don't know if anybody looked at the CFTC data on Friday night. I'll show you that when we look at the charts, but there was actually some buying into the S&P last week, even as it was coming off, which we can see that represented itself in the equal weight index. So if we, some of the time it's just like looking at the headlines. We sometimes need to look at the relative dailies and see if there's something else afoot. So it's tech down, market in general digging in, the rotation we look for now. Does the heavyweight stocks, do they dominate on the downside? It all depends in the mix now, doesn't it? So like I say, we could get the draw with sort of inline earnings and the rest of the other industrial sectors coming through stronger, in which case we go into this range-bound area without the previous big leadership, but you never know. We've been wanting breadth. We're getting breadth. It's not time to run away from the market particularly. So there are no talking heads from the Fed this week. Thank the Lord. I'm fed up of hearing them. Same old. But of course, they're going into their meeting next week, April the 30th, 1st of May. Bank of Japan, they've got a chance this week to up the rhetoric to try and help. They've got CPI and Tokyo CPI, which might give them a chance to change their rate outlook implicitly and explicitly. And the dollar looks like it's only got one more little upside to hit that equal legs we've been talking about. If that coincides with Japan getting their act together, then the yen could easily have a strong period, like we've been saying, even if it's ultimately going up again, medium term on the relative rate outlooks in the US and Japan. There very much looks like we're in a consolidation phase that needs a down leg to UJ. Euro, likewise, 3 to 4 rate cuts in there. There was within the pack, if you look at the preview, there's quite a bit of chatter about June, and a few of them a little bit happier to definitely say July, but it's definitely June or July for sure, with the first rate coming, and I'm pretty much nailed on it's going to be June. Even Nagel, uber bear, uber hawkish, said, as long as the data doesn't change, June looks like it's on board. But that probably means 3 to 4 cuts for Euro, only 2 at the moment for America, unless something changes. So you're going to hear more and more about parity, but I do think this digs in with one more low into the 105, 105 and a half area, but we'll have to keep our eye on that. Commodities coming back a little bit this week. No geopolitics over the weekend. We were overdue, a little pullback. Gold, I've been chatting to a couple of people on that. It's still on the edge of playing it within this triangular range. We've just put in a 3-wave that's hit the bottom of an arbitrarily placed triangle bottom I did on the Friday live show, and we're on a support zone around 23.50. It's just bounced off that. Don't rule out there being a test of that 23.20 support zone where the all-time high 3-wave pullback ended. I wouldn't put you off buying either with a sensible stop loss. I do think we're going up to that 25.50 range fairly soon. There's lots of fundamentals stacking up in the favor of continued gold breakout and reasons why it will be bought on decent pullbacks. We'll chat a little bit about that later, but mainly in the live show, if you can join us at 1:30 Mondays and Fridays, and we'll chat about some more deep fundamentals that suggest we've got a lot more gold upside to come. Data-wise, pretty light. We've got global PMIs just about everywhere in regionally, and PCE at the end of the week in the US to confirm, but probably to a lesser degree, that underlying inflation trend. You never know, we might get lucky and see a weak print at some point come through there. There's durable goods on Thursday. We know what we're looking for there. The Jordan effect, remember, ex-air, ex-defense. We mentioned that Tokyo and Japan have got their CPI, but it's a relatively light talking heads and data week. So play it nice and carefully. So we'll have a quick look at some more of the charts. The Nasdaq 100, we were looking for a 3-wave pullback. It's extended beyond the 1 level. You can see originally we had this third intermediate wave here and ended on a double Fibonacci. And then since then we've been pulling back to, we've currently somewhere between the spot 5, spot 618 and quite a lower degree 4th wave in there where we had a lot of support and breakout previously. So there's every reason to rally from this level, but it could equally be, because this has been so impulsive, this is one of the reasons why I'm saying that we might go into range bound. This has made a big spurt that's been filling in lots of these spurty upside gaps on the way up. They've all been filled in pretty quickly. It's never a good sign when that happens. We may get a relief rally, not necessarily, possibly could take out expanded all-time high in, but ultimately I think we come back and probably retest this area as everything plays out. But you never know if there's enough technically to say that it's all done. We've had enough waves, got enough depth, and we could return to that original 3, 4, 5 heaven we were talking about. But we've got a lot of sentiment reversal to put in to make that happen. We've looked at US 30. Dollar, again, as I said previously, we were looking for a final ABC to come in. Sometimes these connectors might not be as deep and as wide as we'd hoped. So if it ends up being that the connectors put in here, we could have further downside down towards this 1 spot 618 range, which is breaking 105. But if we hold what we originally put in and that we're in a final 5 legs down, we've probably done. There's an argument that we could have put 5 in which case where we put the 2 low in around 105, that's 106. Yeah, 106 becomes a very important hold level. We've not broken it since. So again, a retest, if this is the start of a nesting upwards, 106 kind of level, 10600 is a level to look out for. Let's have that in as a stop loss if we're playing longs. Dollar yen, as we said, previous idea is that we've broken that original 152. We're putting in an expanded flat consolidation before potentially the relative US Japanese yen rate changes continues to take over, but we're very extended short term. There's an argument that we've got in the 5 waves with the current breakout. It's just turned slightly. I think a lot of that, the danger is, I mean, we're bouncing again today on the dollar. A lot of that is to do with the safe haven flows, geopolitics, into the yen and Swiss franc, I think, on Friday. So one more jump up in the dollar, hopefully. And then as we progress through the week and go through those meetings and the updates, potentially we start that little recovery in the yen phase. But, lots can happen in that. It's not a high probability play for the moment until we get more info. The US 500 we looked at last week had a big breakdown in the percentage above 50-day moving average. That's continued to slide all the way down to 35, only 35% above 50-day moving average. You'd expect that if you're getting the continued, and it has been lower by the look of that. Yeah, we were down to 30% at one point, which was into the Wednesday session. We bounced off that. So yeah, the underlying with a bit of volume and the stock percentage above 50 days moving up, that's telling you, as the equal weight was telling us, that there's a bit of rotation going on there. So it's not as dire at the moment as you think, but we don't want that to start turning down again, or there'll be trouble ahead, as they say. Just to look at that dollar chart, remember, equal legs is 106.71.70. To me, it looks like we need one more attack at that, really, just to finish the whole thing off. But we're not getting these clean things at the moment. We keep getting fakes, don't we? We have a 3-wave there. It's kind of a 5, a 3, and yeah, I'd just like to see a little bit more topping out with highs before we come off. The stochastics there suggest I'd like to see that high with a lower peak down here in the stochastics, get the divergence, and then boom, hopefully. Germany, again, we talked midweek about changing the connector. Have we done enough to put a 4th wave in? It looks dangerously like it might only be 3 swings there, so this could be a dead cat bounce. I think we play Germany with a stop loss against that current fall low. That gives us 2.5-3% to play with maybe there if this is going to continue. I mean, overall, we like it. It's just a case of how we interpret where the 5th. You could argue there's a 5th wave bounce back and finish there, which means that we have properly bottomed. It's not as stark as you'd like to see an ending 5, but you can make a case for it being in there. But it's right on. I mean, look at it. It's almost like the computers are doing it. It's a 1-spot 618 double head fake. Is that enough of an overall 4 to make you think we're just putting another connector in here before we put another 5 in? So be careful. DAX, I do like it. Fundamentally, it is all the indices to play for breakout, but it has been a powerhouse. It has been due consolidation, and that's a dangerous one. Just make sure you're properly covered. Oil, what a disappointment. Having got here, identified the trends, the geopolitics all came flying in, the demand numbers came in, we had a big drawdown, and then ever since then we've had inventory build-ups, we've had arguments in Saudi Arabia, everyone's not playing by their supply restriction ball. Geopolitics has had everything thrown at it, and it's unwound. We're in an interesting phase here, because if we get the 1-for-1 pullback on 4, that means we're going to have an overlapping set of 3 waves. Now, this has been a meandering, tough to call move up in oil, which we've talked about, and that's why it's been labelled for a long time as being a consolidation. It could fit back with our flip to being more impulsively bullish, because you've got a bunch of overlapping 3 waves, and 5 of them, that means it's a leading diagonal, and that allows you to overlap. I'll have a look at that in a bit more detail for this afternoon, but I wouldn't put off expecting to see a bounce back in the more commodity complex upside once everything settles down again. So outside that, what else have we got for the week? We mentioned earnings. SAP is the first sort of big tech, global tech German company, does enterprise resource software. Tuesday's a big one. Tesla. We've also got some quite a few big heavyweight names reporting this week. Visa and Pepsi, GE in the States, Texas Instruments. The tobacco stocks, Freeport-McMoRan for more of the mining side. Wednesday, Meta, Atlas Copco is a big industrial. Assa Abloy too, SEB. So the industrial underbelly starts to really report, as well as the techs. IBM again. Thursday, Alphabet and Microsoft. AstraZeneca, got Amazon. What else have we got? Merck. I have to double check that Amazon, actually. Merck, Nestle, Caterpillar. That is often taken as a technical analysis leading stock to follow for the market, a bit like the dollar. Sometimes people follow the caterpillar instead. It's always been a bellwether stock. Then ExxonMobil, Toyota, not a bit of a quiet week once we get to Friday. Talked about the data. I got German IFO this week as well. Japanese leading index on Thursday. UK consumer confidence. I think right move this morning. House prices jumped back again. I'll have a look at the detail for this afternoon. No talking heads. A few MPCs, Nagels around ECB supervisory board. A lot of these are just going to be technical comments, not a lot. And then on gold, we're going to talk about the market dynamics this afternoon. But just as a quick idea, this could easily be another 3 to 4 times upside just based on the relative paper transactions versus physical gold output on a yearly basis. And now that we're well into this idea being accepted, people have realized that the Basel III means that you've got to own the gold if you want to use it, as it's now tier 1 status. So I'll look at that in detail this afternoon. Be well worth a listen. It's just another reason why we should be heading for $5,000 per ounce plus in the near term. And then, as the usual, in the pack, a review of everything that was said last week. And there was lots of it, believe me. Okay, so hopefully we'll see you later. If not, good luck in the markets.